Welcome back to the channel. Today, we're exploring one of the most unique ETFs to launch in the space-themed category, the Tuttle Capital Space Industry Income Blast ETF, ticker SPCI. This fund combines exposure to the rapidly growing space industry with a structured option strategy designed to generate weekly income. We'll break down what SPCI is, how it works, and why it stands out in the ETF landscape. This is not financial advice. What is the Tuttle Capital SPCI ETF? SPCI is an actively managed ETF that seeks current income while providing exposure to companies in the Syntax Space Industry Index. This index includes businesses involved in satellite operations, GPS and geospatial technologies, launch services, spacecraft manufacturing, and other space-related activities. The fund typically holds between 10 and 50 companies connected to the global space economy. SPCI's goal is twofold: capture approximately 100% of the upside of the Space Industry Index before fees, generate weekly income through a systematic options overlay. How SPCI works. SPCI uses a combination of equity positions, call options, and synthetic long positions to mirror the performance of the Syntax Space Industry Index. To generate income, the fund employs a put-credit spread strategy. This involves selling near-the-money put options to collect premiums while simultaneously buying further out-of-the-money puts to cap downside risk. This structured approach allows the ETF to target weekly distributions. The fund carries an expense ratio of 0.99%, and as of recent data, it holds roughly 47 positions. Why SPCI is unique? SPCI stands out because it blends thematic exposure with income generation, a combination not commonly found in space-focused ETFs. Most space ETFs simply track the sector's performance. SPCI, however, aims to give investors exposure to the space economy and generate regular cash flow through options. This dual-mandate approach is especially notable given the rapid growth of the global space industry driven by satellite deployment, private launch companies, and increased government investment. Risks to understand. Like all ETFs, SPCI comes with risks. The fund notes that equity volatility, options exposure, and the concentrated nature of the space industry can all impact performance.
Weekly distributions may include return of capital, which reduces NAV and does not represent pure income. Final takeaway. The Tuttle Capital SPCI ETF is a first-of-its-kind product that blends space sector exposure with a disciplined option strategy designed for weekly income. It's an innovative entry in the thematic ETF space and reflects the growing investor interest in the future of the space economy. If you enjoyed this breakdown, hit like, subscribe, and let me know which ETF you want covered next.